Is it over? The crypto cycle's done. Sell now, get out before the worst comes. Everything's about to go down 99%. It's over. See you in 4 years, suckers. No. I don't believe that to be the case, although we are already seeing some people across social media timelines saying that this is the end, it's over, macro has got too bad. It's done, we're cooked. I'm going to break that down with you in today's video, talk about the seasonality of January in particular following an election year, talk about some of the key fears that are driving sentiment in the market right now and how valid those are and how much impact they might actually have. Let's get into this. It's a big topic. So first and foremost, let's talk about the month of January. This is actually all the way back in 2017. Those were simpler times back then. Anyway, look at this. Beautiful rally to start the year. Bitcoin goes from around $1,000 up to around 1,150 or something like that before a 34% correction, losing, might I add, the 50-day EMA, blue line on the chart here. Lost it for about a week, popped back up, and then off to the races. Okay? Early strength in January, followed by, well, lame price action leading into the middle of the month. Okay? Trump got into office right around there. Boom. Proceeding to, of course, then have a mega rally throughout the rest of the year. Beautiful, beautiful, beautiful year. Now let's fast forward a little bit to the next presidential election. Oh, a lot of water under the bridge here, isn't there? Goodness gracious. I remember all these days like they were yesterday. Anyway, besides the point, I'm old. Here we go. Look at this. 2021. Another election year, right? New administration comes in, bada bing, bada boom. Early January rally, look at this. Price goes from 29K up to 42K, followed by a gargantuan correction of down 32% almost, ending the month of January down before a mega rally comes back in the month of February. Of course, then we really got off to the races, got all the way up to around $65,000 in April. Okay? Think about it. Beautiful rally, right? There was a 100% rally. We had about a 50% rally recently for Bitcoin. We had a 100% rally here, 30% correction in the month of January, right around the time of the presidential inauguration. Okay? Blammo. Look at that. February, March, April. Crazy months. Huge volatility. Look at how much volatility there was. I mean, the balls you have to regularly just operate in these markets is absolutely insane. Look at this. On the rally up here, you had a 31% drop, a 26% drop, a 20% drop before finally hitting 65K. Goodness gracious me, man. Let's travel down history lane a little bit more and come back up to, well, stick that back over there. Come back up to last year, actually. Look at this. Now, I know it's not an election year, but still it gives you a bit of an idea of the seasonality of January. January starts, price of Bitcoin is at $42,000, rallies up to $49,000, drops 22%, back down to $38,000, loses the 50-day EMA, might I add, once again, before rallying like crazy into the early months of the year, topping out in March. March, April, guys, I'm telling you, March, April, those are the months to watch out for. Beware the Ides of March, beware the Fed meeting in March, and keep in mind that sell in May and go away tends to be a real thing in markets. So just FYI, March, April this year, I got my eyes on you. I want to share these charts here real quick as well from Joe McCann. He says, let's get into some astrology for traders. Technical analysis time. You can see right over here. This is the monthly chart. Month of December printed a shooting star candle, which has been a top signal a couple of times in Bitcoin's brief history. Yes, 2 times not a large sample, but the shooting star candle is generally a bearish candle pattern, okay? To keep in mind. You can see here, okay, you can see here, followed by bearish months. It's not a given that that's going to happen, just food for thought, right? He said, moreover, there's a massive gap to be filled in the CME Bitcoin futures down near $75,000. Oh, man, that'd be crazy. We run it all the way right back down to the start and then run it up again. This market's crazy, man. Yeah, it's crazy. He said, in prior bull markets, for Bitcoin, pullbacks are primarily drawn down to the 10-month moving average. 10-month moving average. Interesting, right? In this case, right now, around $75,000. Says Tuesday's price action was a classic rejection beneath a multi-month regression. Now, this is a very interesting line on the chart right here. You can see this right here. That was our uptrend. Uptrend was lost back here mid-December. This rally here in around Christmas failed to retake that. The most recent rally, again, rejected at the trend line. Now, Joe goes on to say that he is tactically bearish at the moment. Tactically bearish at the moment. Okay? So not to say it's all over, everything's going to go to zero. Tactically bearish. Okay? So short-term bearish implications as we're currently seeing play out on the charts. Doesn't mean everything's cooked forever. Hey, real quick, guys, if you want to get involved in the BitUnix trading competition, you gotta check this out. So not only do they have the regular 20% rebate deal going on, you deposit $1,000, you get $200 back. That's awesome, of course. But right now, you have a crazy trading competition going on. That's only for people who signed up under my link, by the way. So the more you trade, the more you can win, basically. First place can get 20% of a $60,000 trading pool bonus, okay? So big prizes up for grabs here. So all you have to do, link down below, start your account. You can start trading with no KYC, enjoy your privacy, all the top coins, deep liquidity, great place to be doing trading over here on BitUnix. I do a lot of my trading over on BitUnix these days. Come over here, start doing your trading, deposit your $1,000, get your $200 rebate, start trading, start having fun, and you'll get in position to win some very nice prizes, okay? Link down below, go check it out. Now, that's the chart part of the presentation. Now, the rest of what I want to break down here with you guys is actually what's freaking the market out. So that's the charts. That's what happens in January, okay? We're going to get into the question of, is the top in? And I don't think that's the case. I think right now we're looking at a relatively standard January, but we have to try to dive into what are some of the things that are actually freaking the market out so much right now. Right now, people are worried that the Fed is being too damn hawkish. Okay, right now we only have 2 rate cuts priced in for 2025. Now, it doesn't mean that the Fed can't adjust in a few months and say, actually, we're going to do a couple more rate cuts. Okay, 2 rate cuts is still fine. Markets went to insane highs on very high interest rates. The U.S. economy has been trucking along very, very nicely. The trick, though, if inflation stays closer to 3%, that becomes problematic, and it might mean that the Fed might not cut even as much as is currently priced in. People are worried about this. What if inflation spikes up even more? Now, that's a real problem. If inflation goes back up to 4 or 5%, is the Fed going to have to raise rates again? That would be bad. Right now, the U.S. economy is also very strong, stubbornly strong. Jobs, in spite of all the doomer posting about jobs markets, unemployment numbers are near record lows. Near, bounced a little bit off the bottom. That little bounce off the bottom, oh my gosh, the Armageddon's coming soon. And there's going to be real problems with AI unemployment and stuff like that, taking white-collar jobs and robots taking blue-collar jobs and all the rest of it over the next 5 to 10 years. Not next year. It's not going to happen that soon. Okay, it's coming, but not next year. Okay, what's for later us to worry about. But if the U.S. economy is too strong, it also doesn't give the Fed a great reason to cut the rates, because they'll say, look, economy's doing just fine on these kind of rates. Jobs market's just fine on these kind of rates. We'll just keep it as is. Inflation's still a bit of a problem, so we'll keep the rates as is. Now, people are saying that tariffs, Trump's tariff proposals, are going to cause massive inflation coming in for consumers. Well, first off, the size of the tariffs probably going to be a bit overestimated. People think, Trump's he's a businessman, right? He's going to come in and go real highball. Hey, we're going to do these crazy big tariffs, and then there's going to be negotiations and all that stuff. And there will be tariffs in the end, but probably not to the degree that people think that they're going to happen, right? You pitch it high, and then you negotiate down, okay? Standard tactics in business. And by the way, the last time that Trump was in office, he did tariffs as well. He's a tariff guy. He likes tariffs. And guess what? Inflation did not explode because of that. Inflation exploded because of the whole coronavirus stuff, okay? Next, the dollar is too strong. Yes, the dollar is definitely too strong currently. The dollar is acting like a wrecking ball for risk assets right now. It's very, very true. The DXY was up to 109 or something last I looked. It's a mess, okay? However, Take it back to the last Trump presidency. Guess when the dollar topped out? Right around Trump's inauguration. Trump wants a weaker dollar. Okay, right now the dollar is rallying. Strong dollar, bad for risk assets. But Trump wants a weaker dollar, and that's good for risk assets. Okay? Another fear, China is crashing and it's going to suck the world down the toilet with it. Well, the deflation in China is real right now. The Chinese bond markets are an absolute mess, and China's economy is a mess. The property markets are a mess. Just the stock markets are a mess. We've got a full video coming on that soon and how it can affect you as a cryptocurrency investor, so make sure you watch that. Coming out in a few days. But the Chinese disinflation, ironically, could help benefit everybody in a weird way because it could help bring prices down for consumers, actually. Disinflation in China might have a disinflationary effect for U.S. consumers as well and provide the Fed that room to cut rates. The Fed, by the way, also has to refinance trillions of dollars in debt this year, and if the rates are too high, it's going to mean they have to pay a lot more on that later. So again, it's good for them to lower rates and to find reasons to lower the rates. We also have stuff like the reverse repo markets, right? And the reverse repo pool is nearly empty. There's like $200 billion or something left in it, right? That's nearly empty. And when it does get empty, which is probably going to happen around like February, March or something, depending on how soon it gets drawn down, obviously, guess what? The Fed needs to do something. The Fed needs to replenish that pool of money, okay? Can't get itself in a situation like it did in 2019 where it's like, oh, whoops, we're out of money, and what are we going to do? They need to replenish the money, which is what they're going to have to do. And that's going to require some kind of quantitative easing, AKA money printer go burr, baby. Okay? So there's that. Plus, with China's flailing economy right now and the deflationary pressures going on over there, China is going to have to keep dumping trillions of dollars literally into their economy to keep the damn thing afloat. And there's a lot of stuff working against China right now, okay? Second biggest economy in the world is facing a lot of pressures. Pressures similar to what Japan experienced back in the late 80s, early 90s, okay? There's demographic pressures. There's all kinds of stuff going on. Look, China's economy is crazy, man, without a doubt. I would not bet against the Chinese economy in the long term. But short term, there's some problems, and that's going to require some serious money printing, okay? Remember, China let us out of the global liquidity suck in 2022 when they started printing in October 2022, which is when the market started to rebound a little bit, only, of course, then derailed by the FTX bullshit, okay? But we kept moving up after that because China kept injecting money. Other governments followed, and the USA is going to have to start doing it much sooner than people expect. Another thing that people are going to say, well, you know, the market's just too damn optimistic about this whole Trump thing, okay? Is he really going to be that good for anything? Markets are already at massive peaks. Look at stocks. Look at all the indexes. They're all going crazy. Bitcoin had 108K. Maybe that's enough. Maybe that's enough. Well, not crypto more broadly. Most of their crypto coins are still sucking giant balls somewhere. But, you know, Bitcoin did really well. A couple other coins did really well. Look, here's the deal. Markets can always go a lot higher. The AI bubble is not fully inflated yet, in my opinion. I think the AI stuff, especially with what Sam Altman was saying the other day, that AGI could come online in 2025, that bubble gets a lot bigger, okay? And we're looking at probably a dot-com epic bubble pop when it comes. It's going to be insane, but we're not quite there yet, okay? We're not quite there yet. How long it takes us to get there, that's a different question. But it is coming, but not quite yet. Also, a lot of analysts think that a huge amount of liquidity is going to keep coming in, okay? So that's something to keep in mind here as well, is that all this stuff that's happening is going to bring in more liquidity for the markets, okay? All the stuff. There's going to be a massive flood of liquidity. Trump's pro-crypto stuff, it's not going to all be immediate. This is another one of the fears, right? Some of it is rumored to be basically immediate. I know that there's been a lot of crypto money pushing behind Donald Trump, and they want immediate results for their money. Now, whether that's the Bitcoin strategic reserve setup or some of the other stuff they've been talking about, we're going to see executive orders probably on day one related to crypto, okay? And other things coming later on. And it's going to be massive. And people overestimate the impact on day one and underestimate it long term, as they always do. But regardless of how it goes, Trump has kicked off nation state from just the other day. The Czech Republic's like, damn, our central bank needs to buy some Bitcoin too. The new SEC head's a very pro-crypto guy, okay? This dude's gonna approve a shit ton of altcoin ETFs. You're gonna get an XRP ETF. You're gonna get a Solana ETF, a Dogecoin ETF, a Litecoin ETF. It's gonna be nuts. Wall Street's coming for your altcoin bags. Not all of them, but some of them. It's gonna be crazy, okay? We're having an AI crypto czar, David Sachs, coming in. This guy knows crypto. Okay, we have real people who know the industry moving into key positions of power. Now, of course, the Max Payne scenario is we get a repeat of 2024. The 108 is the top until Q4 again, 2025. No, we're not doing that. We're not doing that, market. Hey, look, here's my take. Final thoughts here on this video. I don't want to let it go too long here. What I'm seeing right now, usual post-election January jitters, okay? Enter the year a bit optimistically, everybody gets back to work, throws a few bids in, then they realize, oh shit, we have this new government is gonna take over, what's gonna happen? Oh my gosh, macro stuff, what's gonna happen this year? Everyone's freaking out. It's happened in the last 2 election years, okay, inauguration years years following the election. Macro's not actually that bad. I know bonds are having a bit of a moment. I know the dollar's showing a little bit too much strength and there's trouble in China. Okay, I get it. There's always some shit going on. Nothing's perfect in the world, ever. Show me the time when it's been perfect. It's never been perfect. Oh, so 2021 was great. Yeah, they printed trillions of dollars and caused insane inflation and shut half the world down. That was not a perfect scenario, guys. We did well for markets for a short amount of time, but come on, stuff's never perfect, is it? But things are good enough. U.S. economy's strong. Markets rallied to these highs on high rates. Okay? Things are not as bad as they appear, as the macro doomers that post daily that the sky is falling every day. You know, the boy who cried wolf, they just cry wolf so many times. Someday the wolf might come. But not today, my friends. Not today. And look, if $108,000 was truly the top for Bitcoin, then I'll tell you this, not a single damn top signal, nothing, throw it all out. Anything you know about the market, just throw it out. Because not a single top signal that we would expect to see around a market top for Bitcoin showed. Not a single one. Nothing. Some of them got vaguely close, but nothing. Well, we got a little bit of greed. Yeah, greed comes and goes in the market. Okay, well, all the on-chain indicators, all the technical indicators, nothing really showed a very strong topping signal. Maybe it was just the weakest top ever, and all this stuff is just out the window, and just, you know, you have to just sell aggressively all the damn time. You can't wait for the stars to align. Look, in my opinion, the cycle top is not in, it's not even close. Macro fears remain strong, and we have to continue paying attention to those things because we could see massive unwinds in the market at any time due to some of these macro fears. But I believe the best days of this market are ahead of us. AI is going to keep going nuts. We have a lot of great things coming. The money printers are going to come. The liquidity is going to come. The QE is going to come. But just ask yourself this, because here's an interesting thing for you, and I want to finish the video with this. If we did top the other day, would you be okay? Did you actually make any money? Because one day, and again, I do not believe the cycle's over. I think we have the best days of the cycle ahead of us. Okay? Could be wrong. Got huge percentages of my net worth always riding on this market, so let's see. But best days of the market ahead of us. But if that was the top, did you make any money? Would you be okay? Because here's the deal. One day in the not-so-distant future, the top will in fact be in. And you had better have a damn good answer to those questions when the top is in. Because as you see, tops come very fast. And a few days later, you're left wondering, where the hell did all my money go? Okay? So you have to be taking money aggressively out of these markets all the time when there's pumps, okay? Because the dumps come fast and the market ends real fast. Okay, guys, that's it. Thanks for watching. I know this one got a little bit long, but I hope it was useful for you. Thanks for watching. Bye.